India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning, hello, and welcome to a brand new week and a brand new edition of Bazaar Morning Call. We're coming to you as always live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay, back with the first day of the new year in terms of back in the studios with my friends and co-hosts Nigel D'Souza and Rima Tendulkar. Let me start by wishing both of you a very, very happy new year, guys.
Well, happy new year, Surabhi, and welcome back. And I'll tell you what, it's happy new year to a lot of people out there, because last week I don't think too many people were tuned in. So a lot of people getting back to work. A very, very happy new year. Let's hope 2025 is better than 2024.
And we're kick-starting with so much news flow, right?
Yeah.
In terms of the business updates from banks, the consumer stocks. Now that Surabhi is back, things are going to be in action.
Well, I think the action was happening even while I was away, guys, because I was watching that FII number very carefully, even while I was away from the market, just because it kept making headlines. We were hoping for that FII selling to ebb, but I don't think that's exactly what transpired last week. So let's quickly start looking at the cues. The good thing is that we've managed to see a positive close on Wall Street. So Friday was fairly okay. After a shaky start, the indices across the board, S&P 500, the Dow, the Nasdaq, all of them put on gains between about 0.8% to all the way up to 1.8% of the Nasdaq. The tech pack was really fired up in US trading on Friday. So that's one. The data point that came out was on the manufacturing front. So we had the December US ISM manufacturing number come in, and that number is creeping back towards the 50 mark, which basically tells you that the economy or the manufacturing sector is expanding once again. The number came in at about 49.3 in December, which was higher than estimates. And what did that do? Not only did that sort of give a leg up to the equity market sentiment, but once again, we've been talking about the rise in the dollar and the rise in yields, and that continued on Friday as well. In fact, if you're talking about US yields, I mean, largely speaking, they have been elevated through the last week, including on Friday, 4.6% thereabout on the US 10-year. And the dollar index is still hovering around the 109 level. I mean, those historic moves that we've seen last week, all put together, the DXY was up almost 1%. And even this morning, it's managing a move around the 109 handle, which has been the big story, which has been driving markets around the world, not just the US. We'll watch out for how that plays out as well. Talking about some of the cues this week, I mean, it's going to be all about this all-important jobs report, which comes out on Friday. That's going to be setting the chain of events in motion. In the anticipation, of course, we'll watch out for more announcements and, of course, more social media posts coming in from either Donald Trump or Mr. Musk, which has happened over the weekend as well. What also happened over the weekend, just to put the global picture in context, was China, particularly the PBOC, the Chinese Central Bank, wrapped up a two-day meeting, and on Saturday, the highlight was the PBOC committing to what should be a moderately loose monetary policy for 2025. Now, there were no specific indications of how many rate cuts and when, but the idea was that the PBOC is going to be largely supportive. So let's watch for the China piece as well. Now, coming to the point that I was talking about, all through last week, if you thought that at least the end of the year phenomena is going to keep the FII selling at bay, that did not happen. Just look at the bars, look at the numbers. And then Friday was the biggest one. Again, selling of over 4,000 crores coming in. To some extent, it was masked by the domestic buying, but it wasn't enough. And this is something that's going to be the biggest watch point as we talk about it. The FPI exodus is having its impact on the currency as well, coupled with the fact that the dollar is very, very strong in the international market. So watch out for this. The rupee has been racing towards the 86 mark. And if you look at the forex flow picture that we got on Friday, given that the fact that the RBI has been in the forex markets, off and on, our forex reserves also depleted by about 4 billion, give or take. So the rupee picture continues to be extremely important. Now, for the market, 1% rise overall for the Nifty last week. But the question is, can the Nifty see any kind of a rise in the face of this kind of FPI selling? It's been testing the 20 DMA and the 50 DMA. Friday, the close wasn't above these levels. So let's see how it plays out from here on. And I would say the key question for me is, can earnings, the FPIs will do what they do, but can earnings provide any kind of a support? I know Rima is going to kickstart the season with TCS. But ahead of the earnings, we got a lot of corporate commentary, and we'll talk about it as we go forward from banks, from consumer companies. But on consumer, folks, what I noted was that it's still a very, very mixed picture. Dabur is still very worried about what's happening with the general trade channel. They're still very, very cautious, talking about single-digit growth. But there are others like Marico that saying that double-digit growth is going to happen in the third quarter. So I think the commentary from consumer is very mixed. Banking is lots of updates. But really, I guess the question is going to be, can domestic earnings in the third quarter provide a little more hope and optimism compared to what we had from earnings in the second quarter?
Well, watch for HDFC Bank, right? That's the biggest contributor, and it was the biggest drag on Friday, 2.5% lower for the stock price, and the advances growth was very anemic. That said, the deposits growth picked up to about 16% on a year-on-year basis, so that was a positive, but the street will be a bit worried about the fact that the advances growth has been just tepid at close to about 3%. So that's going to be an important stock. In fact, lots of heavyweights, right? Kotak Mahindra Bank, ITC, and so many other financial stock updates, whether it's from Bajaj Finance, Indices Bank, Bandhan, RBL, L&T Finance, Bank of India. We'll talk more about it. In terms of the key data this week, remember the NYSE will be shut on Thursday to mourn the death of the former President Jimmy Carter. So it's going to be a holiday truncated week for the US markets this week. On Wednesday, you've got the ADP employment report. On Thursday, the FOMC minutes for the December meeting and the JOLTS data. And Friday, the all-important non-farm payroll data. On Friday, the markets closed lower, closer to the 24,000 mark. Thursday was a strong session for our markets, but on Friday, the markets pulled back and gave up close to about 0.7%. Some of the key markers to watch. So last week, the intraday low was 23,460 and the intraday high was 24,226. So just in the immediate term, watch for 24,460 going up to 24,300. And as long as the Nifty holds on to the 200-day moving average, which is 23,900, as it did on Friday's, as per Friday's close, I think the bulls will try to push higher and higher through the course of the week. But depends on the earnings and the headlines that we get on that front.
Well, that's right. You know what's positive from the US market perspective is at least it ended in the green. And the other positive was the dollar index cooled off a little bit from the top. I'll tell you what, the bulls will be very, very happy looking at that because the dollar index was going out of whack towards that 110 odd mark. So cooling off is good news. What did the FIIs do though? As you all said, yes, they sold in the cash market and they added all the shots that they unwound or they covered in the previous trading session. So there was a big short addition of more than 20,000 contracts on index futures and some mild unwinding of long positions. So how do the things stack now? The FIs and the clients, they're on opposite ends of the spectrum. The FIs net short with 83% of their positioning on the short side, with the absolute number at around 2.3 lakh contracts on the short side. Clients, they are net long with close to around 70% of their positions on the long side, and that number is roughly around 2.5 lakh contracts, and both of them have moved to the opposite ends of the spectrum. Two strikes were fairly active. 24,100 call, well, that was fairly active in Friday's trading session. 40 lakh shares getting added there. And on the downside, you look at the 23,700 put, that was fairly active. Plugging in the numbers and going by the technical levels as well, the 24,200 mark becomes the near-term resistance. Why do I say that? Because the 20 and the 50 DMA are in that vicinity of around 24,150. And we did a U-turn from around 24,200. So that's the near-term resistance that we're looking at. Going by the options data, that becomes the near-term support because the 23,700 put was active, premium roughly around 50 rupees. So that's the level to track on the downside. Well, the swing factor of the day is going to be HDFC Bank. The stock has gone weak into this operational update and it seems the street was sensing something. I won't be surprised if, the stock opens up a little bit softish, it moves up, and this will actually be the trend for the day. This one, the way it moves, that's going to send the note for the remaining of the day because the street clearly was factoring in some kind of weakness, and it appears, at least with regard to this operational update, the weakness could be in the price if it opens up a little bit lower. The Nifty Bank as well, very, very important market is what it is at. It closed closer around that 51,000 odd mark. On the upside, you're looking at the 100 DMA, which is a little bit away, but the 200 DMA is around 300 points away from current levels. So that's the crucial zone that you're looking at for the Nifty Bank. Finally, another stock that I'm going to be looking at is Crompton Consumer Electricals. The stock has seen a very, very sharp correction in the last 1 month itself. It's down close to around 10%. But there was big delivery-based action in Friday's trading session. 25 lakh shares got delivered. That compares with an average of around 6 to around 7 lakh shares. So the fall was only around 2% on Friday, and big delivery-based action is what we saw. Let's see whether or not it's forming some kind of bottoming out process because it's been a big underperformer just in the last 1 month or so. So I'll keep an eye out on this stock. It's moved to around 365 rupees odd. Stock to track.
Thank you very much for that.